Good morning, everyone. This is Financial Literacy One-on-One. I wanted to really help out a lot of people's portfolio when it comes to this today, because I know a lot of you, we are doing a lot. Sorry about that, ladies and gentlemen, technical difficulty. But nonetheless, I want us to start balancing our portfolio. And we've been doing a lot of high risk investing. We've been doing strictly stocks. Okay. We've talked about gold stocks. We've talked about tech stocks, you name it. We've talked about oil, fuel, energy, electric car vehicles, you name it. We've been all across it with my stock reviews. But I think that I need to really educate, inform, and tell you guys about other ways that you should be investing your money. That's what I believe, because ETFs and also index funds are the way that you absolutely a sense of hedging your stock portfolio. You shouldn't just be heavy in one area. Now, granted, when you're younger, we tend to be more aggressive in the way that we invest. Okay, meaning that you are probably like 65 to 75% in stocks, where you're only like 10% in bonds and maybe 15% in index and ETFs. Now, but in order for you to be a well-diversified investor, you need to have in your portfolio, you need to have stocks, you need to have ETFs and index funds, you need to have bonds. And no, I would never tell you guys to invest in CDs, because there's really no money inside of it, ladies and gentlemen. There's no money at all. Now, this is not a class about ETFs. Okay, we're going to go over a couple of them, but we need to understand that ETF, dealing with particular market it is, but ETF, again, means exchange traded fund, is a type of fund that owns the underlying assets of stocks or assets like bonds, stocks, foreign currencies, oil futures, gold bonds, etc. Okay. But what I love about ETFs, they again are a basket of stocks in the same sector. So you may see IBM, Cisco Systems, blue chip companies all within the same ETFs, what gives you even more diversification in that particular market. So that really helps you out. So anyway, before I get into ETF even further, we're going to look at my portfolio. It's been all over the place. I don't know what's going on with it. And of course, TGIF today, ladies and gentlemen, TGIF. So let's look into it really quickly. So here's my portfolio going on today. It's up and down. It looks very, very volatile. Let me see, I probably need to sell this particular option because it's real close, and I'm thinking it's going to have a correction day. They usually have a correction day a week or two prior to that particular option actually expiring. I don't know why, but I'm going to show you some trades I made yesterday. Let's look into those. Let's see how they are doing. So as you can tell, I have Snow, Frog, and Amwell. I'm not doing well. I'm not doing well at all. These are those IPOs that I went over yesterday. Excuse me. These are the IPOs that I actually went over in the past week or two. And definitely the numbers are not adding up, especially for Snowflake. Okay. I'm really disappointed in Snowflake. Look at this. Let me show you the week here. Look at this. The potential for Snowflake should have been a lot better. I'm not going to get into it. Let's go ahead and talk about some ETFs. Now, I won't say I'm a big investor in Vanguard, but I do have ETFs with Vanguard. That's another account. Only thing I do with Vanguard is ETFs. That's the only thing I do with Vanguard. Now, of course, on the Robinhood and Webull platform, you guys can invest in ETFs as well, in fractional and shares. So don't let the $100, stock price scare you away. Like right here, I have $19 buying power. So what I'm gonna do is I'm looking at the 5-year time chart here, And see, March 20th, of course, everyone knows in March, COVID-19. But look at the trajectory of these ETFs. You're going to see most of them continue to go up over the course of time. Now, I'm not going to get too deep. I'm just going to make you aware of some ETFs. And again, do not pay attention to the stock price, because the value of ETFs is not in the stock price, is in the continuous growth. And you won't hear me say this much, the dividends, okay? The dividends. Now, I'm not going to read all of this junk here when it was started, because ETFs, let me tell you, when, who was the guy? Jack Bogle out of Vanguard really came up with this concept. He killed the market. He made people million and billionaires. And Vanguard, I think before his passing, he got it up to be a $5 or $6 trillion company. So the guy knew exactly what he was doing. So that's one. Let's go with growth and value ETFs. I love these collections on Robinhood, because it really just kills the nanny on it. I can just go in and we're looking at different ETFs. Now, that last one was VTV. So let me go over. Nope, that wasn't the one. Let me go over here to Market Watch, and I'm going to type in VTV. And I'm going to show you the dividends in dollars, as they always should have it. Let me see here. Okay, VTV. We're looking for the yield. They're not giving us in dollars. Okay, yeah, 77 cents. Now that's a lot of money, but again, over the course of time, you will be accumulating. You will be accumulating different ETFs and index funds. Again, let's look at this very plainly here. So today it looks like, because ETFs are another real good indicator of how the market is actually performing, ladies and gentlemen. So the market, that's Friday. I guess people like, I'm not even worried about investing today. I'm just worried about, going partying in my house because, COVID-19 and everything. So let's look into the Spdr Portfolio S&P 500 dividend, because again, I know a lot of you look at the stock price, okay, or in rather this case, the ETF price. But again, the stock price, ETF price should not weather you not one way or another. So again, let's look at the 5 years. Boom. Again, as you can tell, ETFs are more, can I say safe? I would say a more safer, well, I can't say more safer. That's a double positive. That sounds stupid. Is this a safer investment for your portfolio? If I had to break up a portfolio, right? Where's my pen at? I'm gonna try to give you a visual aid here. Let's see. Let me see if I can do a visual aid. I'm gonna make this very simple, okay? And of course, this can get more intricate at the time being, okay? So we got this, we got this, we have, I'm just gonna break it off into 3 sections, okay? And some of these sections have 2, okay? And I'm gonna go and futures. All right, so I just wrote this down, okay? So hopefully you guys can see that. All right, I broke it down in 4 sections, all right? So in my opinion, to have a well-balanced portfolio, and this is off the top, I'm missing a couple of things, but no, this is the gist of it. You need stocks, you need bonds. In another section, you have your ETFs and index funds, and then you also have your Forex and futures, okay? Forex, futures, stocks, bonds, ETFs, index. Because a lot of people say, well, commodities. You can invest in commodity and bonds. You can invest in commodity ETFs and index funds. You can invest in commodity and stocks. But when we're talking about stocks, we're not only talking about U.S. stocks. We're also talking about international stocks. And when you got bonds, here's the thing, ladies and gentlemen. Bonds, when you're talking about U.S. government bonds, not junk bonds, but U.S. government bonds that are backed by the Treasury Department, and also corporate bonds are your safest bond. That's why I say there's more information that is actually contained in something. So when I mean bonds, I mean U.S. government bonds and corporate bonds. Now, this is how, when a lot of people tell you that China, we are indebted to China, so many trillions of dollars, because what China does, they come and they buy a lot of U.S. bonds. Now they go through their different entities to buy these securities and bonds. Okay. So, but here's the thing, you can too. I advise you to go over to U.S. Treasury Direct. Okay. If I can recall correctly, U.S. Treasury Direct, and go buy some bonds, because bonds is basically you're loaning the U.S. government money. Okay. They need to get this money from somewhere. And that's what it's all about. And of course, we're talking about ETFs and index funds. So hopefully that visualization have helped you out just a little bit. But let's look at the time chart here over the year. It took a big dive here, of course, in March. We know this, 3 months, 1 month, 1 week, 1 day. Okay. Dividends. What are dividends at? Dividends at 5.84% off a stock price at $28.56. What was the ticker on this one? I didn't see the ticker. Anyone knows the ticker? Let's see. SPYD. So let's go to Market Watch and let's see what they have for us. SPYD. Let's look into that one. We're just looking at dividends. We're familiarizing ourselves with ETF, also known as exchange traded funds. And this is how you establish a well-balanced portfolio. So in here, that has almost 6%. See, again, when it comes to dividends, a lot of people like to look at the percentage and they want to do it longhand, meaning do the math. I just go on Market Watch and look, it's only 26 cents. Some of you are like, oh man, 6% dividend, that must be great. Nah, man, it's 26 cents. For every share that you have of this particular ETF, the Spdr Portfolio S&P 500 dividend ETF, you're only getting 26 cents. Now, it's $28.50 per share. So, I mean, if you do the math and drop $10,000 in there, maybe you'll get $5 off your investment of dividends. Let's pick out another one. Let's do ones under 50. Let's see if we can find most ones. Well, let's try this Charles Schwab one, U.S. Dividend Equity ETF. Okay, and this one is called Bond, actually. Nope. Nah, I hate the word dividends in there. Let's try out another one. Okay, Robinhood. Robinhood is freezing. All right, let's go back. Sorry for the delay. Can't help the internet or Robinhood, and they are taking their time. There we go. Okay, here we go. So Global X, nope, we don't do that. Vanguard Growth ETFs. Now, VUG is the ticker, $223 per share. But let me show you something. And again, ETFs is going to balance your portfolio. You can invest $5. You can invest $10. It does not matter. Good morning, 187. Nice to see you, brother. Boston beer stock been on fire. They got some good bid up there in Boston. Look at this. So again, when we're talking about fractional investing, here's the thing. Doesn't matter. Again, with this new age of fractional investing, don't look at the stock price. Look at the trajectory over the course of time, and you're going to see around 95% of ETFs are always going up. So if it's always going up, no matter how much money you have in there, you're making money. And again, I'm going to go through the time chart very quickly. That's 1 year, that's 3 months. And those huge dips you see, that's Corona, March, April timeframe. You see it. But other than that, it's going up. 3 months, up. 1 month, hit a big snag there. Market correction, it always happens. But as you can tell, over the course of 5 years, this particular ETF has been up 115%. Okay. The dividends on this one is 0.75. Okay. 0.75. We're not going to really get into it. We're going to go over to Market Watch and a 187. If you can put that ticker in for Boston beer stock, we can look at that very quickly while I'm doing this. Ticker on this one was VUG. Let's see here. Vanguard Growth ETF. Now, I'm not getting to the EPS or none of that. They said they just paid dividends. Look, 42 cents. You're going to spend $223 on a share. Again, I don't really look at ETFs as far as the stock price with the new fractional investing. And I also don't look at the dividends because, again, when you like, oh, I want a stock that pays good dividends, there's very few. There's very few, and these stocks are usually up in the hundreds of dollars. Okay, up in the hundreds of dollars for like a dollar or two. But again, if you're buying thousands of stocks, then yeah, you'll get some money back, because there are some people, again, as I said, mostly the baby boomers, they bought a lot of these stocks, ETF, index, regular individual shares, when these were like under $60. And over the course of time, they did dollar cost averaging, where they continue to buy stocks each and every month. And so a lot of them all living off their dividends, but Generation X, millennials, Generation Z, we're not living off dividends like that, ladies and gentlemen. We're not living off that. Yeah, 187, type in the ticker for the Boston beer stock, okay? You said it's been on fire. I want to take a gander at it. And GoGo, I believe, GoGo stock, I have a option in. We can go to my portfolio very quickly. Let me go to my portfolio very quickly, because it's doing okay today. So yeah, I have right here, I have a option, and I'm not doing well on this option. I'm down $20. I'm not doing good at all. I'm down $20, okay? I'm still waiting. This contract expires in November, so I have time. I hope the election doesn't hurt it. So let me see if I can type in our Boston beer stock, since the system is acting slow today. Boston beer, Sam. Okay, Sam. He says it's been on. Oh, $886. Woo, that's some good beer. Man, look at this. Oh, wow. Oh, wow. Let's see here. They've been doing pretty good, like you said. Right here, they have been. You know what? I'm going to go ahead and invest my $19 in here. Why not? They do fractional investing, $19.10. I thought you can make money off a little bit of money in fractional investing. I love it. I love it. I love that I got $19 in there. I can just boom, invest that money. There it is. Let me go down here and see. I made 9 cents already. I mean, a lot of you see, the way I look at money is very different than most people. When I get on here and I'm like, oh, I made 9 cents. People like, you made 9 cents? Man, I don't know damn money. But the same people who talk about that's not any money, they don't have any money. And people I know that are rich, they're like, man, money is money. If your money is making money, right, then you're on the right path. Now, that's the first step. Okay, let me talk about that very quickly. That's the first step. Is your money making money? That's the first step, right? Because you need to have some sort of financial literacy, okay? Because you need to be financial literate. That's the first step. Is your money making money? 1. 2, is your money making money in a time frame or what you predict is being successful with your investments? Okay, because we can understand that you can put money in a CD and they're like, oh, it's going to be 5 years before it matures, and it only matures at 3 or 4%. Once I understand that, okay, yeah, my money is making me money, but it's going to take me 3 years. It's going to take me 5 years to make 3% on $1,000. I can do 10 times the amount in that time frame investing in the stock market. As a matter of fact, I can do 5 times the amount investing in ETFs, which are one of the safest investments that you can ever do, ETFs and index funds. So I'm not going to put my money. That's why you never hear me talk about CDs, because let me tell you something. I did a CD a couple of years ago. I think I put 500 and I had to wait like a year, and I think they gave me like $100. I'm like, hold up, let me go back to my portfolio. Like, so you know what I'm saying? I was like, hold up, let me go back to my portfolio. Like, dude, today I've already made $257. I have to wait an entire year. I have to wait an entire year to make $100 off a CD. Bump that. Bump that. Let me tell you something. I'd rather you go and buy bonds. I'd rather you go and buy bonds than buy CDs. You know why? Because when you buy CDs, your money It's tied up for a year, 3 years, 5 years, 10 years, however that CD is. And if you try to take it out prior to that, there's a penalty. Where if you go and buy bond-based stocks, you can cash them in any time. You can cash them in any time. Or rather, you go to, let me look this up really quickly. So a couple of you guys don't know where to go. Is it U.S. Treasury Direct? Jamie Lopez says try Heineken. They probably doing well too. I don't know. All right. So, ladies and gentlemen, this is where you go to buy stocks. Buy bonds. You can go right directly to Treasury Direct. Up here, you have the tab. You can go Treasury Security and Programs. You can hit Individuals. And I'm not going to walk you through this, but this is where you go to buy your bonds. And the ones I usually go to is Series 1. And then you can read all about what is a bond. It breaks it down all for you. Can you give them as a gift? Pay for education. Minimum purchase. Look at this. Minimum purchase on electronic, what everybody is doing, $25. This is what I love because you're going directly to the source. This is treasurydirect.gov. Okay, let me blow this up in case you guys can't see. Hopefully you can see this now. Okay, minimum purchase $25, electronic, paper $50. Maximum purchase $10,000. Okay, $10,000 minimum purchase. We already went over that. Paper or electronic, you can do both. Is it taxable? Federal income tax? Yes. State and local income tax? No. So you won't be getting double dip because, again, this is from the U.S. federal government. Okay, this is a government site that you guys can go and buy bonds. And what I love about this is it teaches you about it. Okay, I'm going to entertain this for a second. Interest on a I bond is a combination of two rates: a fixed rate of return, which remains the same throughout the life of the bond, and a variable inflation rate, which we calculate twice a year based on changes in the non-seasonal adjusted consumer price index for all urban consumers for all items, including food and energy. So basically, it has inflation and protection, kind of like tips. Okay, tips. These are like tip bonds. Okay, kind of like with that inflation protection. But again, these things break it down. What is an I bond? A savings bond that earns interest based on a combining of fixed rate and inflation rate. Okay, absolutely. That's why I love these particular bonds. What interest does an I bond earn? A combination of a fixed rate that stays the same for the life of the bond and inflation rate that is set twice a year for a bond issued from it. And here's the thing. We're talking about ETFs, right? We're talking about ETFs. Now, I'm just going to type in bond here. Okay, let's see what pops up with Robinhood. You have a PIMCO active bond ETF. Okay, I see you guys writing other stocks there. We're going to get to those stocks very, very quickly here. Where's my $19? I need to refresh. That's what I need to do. Where's my $19 pop back in my account? Robinhood, I'm getting so tired of you. Okay, it's gone. All right, cool. So this is a bond. This is a bond ETF, right? So you can go to treasurydirect.gov and buy your bonds directly, or you can use an investment platform like, Webull, Robinhood, M1 Finance, etc., Charles Schwab, E-Trade, Fidelity, you name it, right? But here's what I love. They have bond ETFs because we're talking about ETFs. They have bond ETFs as well. I'm not going to get into the particulars about this, okay, but they also have dividends, okay? So there you have it. You are investing in bonds, even in ETFs, all right? All right, again, so what do we have in the chat? I said, he said, try Heineken. I don't even really like Heineken at all, but why not? Heine, let's try it out. Okay, we're looking at Heineken here over the course of 5 years. Can I be funny real quick? Don't take offense to this. Black people drinking Heineken, they start drinking Heineken. Black people drinking Heineken, they start drinking Heineken. I don't drink Heineken at all. Not at all. But that's still funny to me. Anyway, see what else we got in the chat. Oh, good morning, Nolan. Good morning, good morning, good morning. See, I missed some of your comments here. Let me go back. 187 says, been tough, but don't give up, guys. But more while it's slow. It's a marathon, not a short-term investment. Thank you. That is correct. That is 100% correct. It is a marathon, not a sprint. All right. 187 says ABIV and OX had good long-term potential. Let's look into those. Now, I've been trading with ABIV. I think this is a pharmaceutical company, if I can remember. I could be wrong. Let's see here. Food and drink. I'm totally off. I'm thinking about something else. Think about BBV or something like that. I don't know. But again, he said long-term potential. I can agree to that. Let's look into this. It's a beverage company that includes beer, carbonated soft drinks, okay, other non-alcoholic and non-carbonated products. Oh, it's out of Brazil, Latin America, Canada. They're in a lot of industry: Barbados, Guatemala, Dominican Republic, St. Vincent, Antigua, Cuba, Barbados, Panama, man, Bolivia, Argentina, Chile, Paraguay, Uruguay. I mean, I might look at this. Hold up, let me say this on my watch list. I'm adding that to my watch list. Okay, they're in everywhere. They are everywhere. Dividends at 4.24%. Analysts are saying sell at 27%. Interesting. Thank you. Okay, I'm looking at that later. That's a lot going on with that particular stock. The other one he said Inox. I think that's the one. Nano X Imaging. Oh, this got to be good. There's Israel again. So it came out. Oh, wow. What's going on with this one? It moved sideways for 5 years? What in the world? Ladies and gentlemen, I've never seen this before. I'm quite baffled now. This is a stock out of Israel. Let's read a little bit more about this. Nano X Imaging engages in development of the medical imaging system. Its product, Nano X system, consists of hardware, Nano X, ARC, and software. Cloud that provides image repository, radiologists matching online and offline diagnostic, review and annotation connectivity to the diagnostic effectiveness of artificial intelligence systems, billing, and reporting. The company was founded by Rand, I'm not going to butcher his name, and a Japanese guy on December 20th, 2018, and is headquartered in Israel. Very interesting. Very interesting. They don't have much information on it. I want to know when the IPO was released. Can we dig a little bit deeper into this one really quickly, guys? This seemed very interesting. It looked like the IPO date, 2018, I believe. Shares open. Where were we at? Oh no, this is open. Nano stock started trading on Friday, August 21, 2020. Shares open at 18 for a total deal size 165 million. Wow. Okay. Why they have this dated back here? This is opened up again at $18. Then it's up to $31. Guys, you know me. I can't do it. I can't let a good thing pass. I'm sorry. I got to at least do $100. I got to do it. Give me my instant money there, Robin Hood. You know I'm good for it. Hook a brother up. Let me refresh. Did I put $1,000 in there? I hope not. I don't got that much money. There it is. I'm put this $100 in there. I'm gonna call it a day. I'm buying 3.16 stocks and review and buy. Well, thank you, 187. That one usually I get them on my IPO radar, but look at this. This is weird. They usually don't have this like this. It usually be empty, and they'll tell you the IPO date. But this is crazy. I don't know what's up with this one. But anyway, ladies and gentlemen, that is my time for this morning. I may come on a little bit later, so stay tuned for that with some more information. But again, I thank you all you guys for your input today concerning stocks. But again, I want you investors who are novice and intermediate to really look into ETFs and bond stocks. ETFs and bond stocks. Whether you're going to buy bonds from the government site, treasurydirect.gov, or you're going to buy from your investment platform. But you want a well-diversified portfolio. And a lot of you are like stocks. And I'm telling you, a house that doesn't have a good base, a house that only has one or two legs is bound to fall. I don't care. You want that thing to be solid. You need at least 4 pillars. You need one on the top left, one on the top right, one on the bottom left, one on the bottom right. And that is how you do it. And I gave my little pie chart earlier. I'm just going to show it again if I can find it. A good way for you guys to start, okay, is by having bonds, ETFs and index funds, stocks, Forex, and futures inside of your portfolio, okay? And a lot of that you can include with your commodities and things of that nature. And of course, I always tell people to invest in gold and silver, actual gold and silver. You can actually invest in gold and silver stocks. As a matter of fact, one more thing before I get out of here, I actually want to see how my Barrick Gold is doing since Warren Buffett actually bought into that one. Barrick Gold. Let's look into this one. I'm going to let you see it really quickly. There's my Barrick Gold. I'm going to show you where I bought this because I bought it before Warren Buffett thought about buying it. So I bought mine in September 16th. Maybe I didn't. I lied. Oh, well. It happens. I had a lapse in judgment. But anyway, the amount of money, haven't made any money today. I'm down $5.71. But anyway, ladies and gentlemen, that is my review to today. Hopefully, with all the information that all the other subscribers have put inside the chat, it helps your portfolio out and you start making good money. This is Financial Literacy 101. Learn money and be inspired. And Nader, welcome to the chat. But my brother, you are late. You guys have a great and wonderful day. I am out.